Hello traders, Gary Wagner here, just about 10 minutes after 10 in Honolulu, 4:10 in New York. It is Wednesday, October the 12th, 2016, and this is the Daily Report for Gold and Silver. Following release of Fed minutes from this month's FOMC meeting, we did see a boost not only in the US dollar, but a boost in precious metals, specifically gold and silver. Equities markets also faring to the upside, although very, very lightly. First to gold. We're looking at COMEX futures closing up about 40 cents on the day, 1256.30. High today, 1260.50 with a low of 1251.20. Over to spot. Spot currently trading up about $2.50, 264, 0.2% in terms of the rise at $1,254.60. Silver, 1750, putting it up about 10 cents on the day, low 1736 and a high 1761. And then lastly, I do want to take a look at COMEX futures at 1754, putting it up about 3 cents on the day. Let's take a look at our first chart. So traders, absolutely no doubt, we have seen this market trade in a fairly tight and consolidated manner over the last couple of trading days, over this last week specifically. We talked about the fact that I believe we are forming some sort of a base in this market, and that base is going to give us some information that we actually have reached a potential bottom or major support level in this market. And the area that I've been looking at in terms of where I think we'll find it is anywhere between, call it 1240 and 1247. It's based on a double harmonics. The double harmonics is this 38% retracement level right here. And of course, that particular retracement is a retracement from about 1045, 1050 up to these record tops, and a 38% retracement would take you to 1247 right here. We haven't hit that low, but just above that low in terms of the lows that we've seen. The second level that we're looking at is a 78% retracement, because on this last move down, realize that we burned past this 61% retracement, which is an area we would typically look for, and that's based upon a much shorter fib retracement from about 1200 up to about 1376, and then that retracement takes us to this point. So it is, I believe, a double harmonics, and it is one in which I believe should hold. But before we take any kind of a stab at the market, we have to have technical confirmation that we are looking at a potential bottom. And as I've talked about before, we get that key pivot point. In other words, the market comes down, it forms a base of some sort, and then we get that V, that pivot point. And it's that pivot point that is so critical, because there's some parameters that we look at to be able to determine it. And one of the things about technical analysis is that by its nature, many of the studies, I should say, within technical analysis are lagging indicators. Moving averages are lagging indicators. Stochastics, lagging indicators, because we're looking at past performance and relating it to current price to determine future price. Whereas there are a couple of different technical indicators that I call leading indicators, candlestick patterns being one of them, because we can get a pattern such as an engulfing bullish. An engulfing bullish is a very simple 2-day pattern, and that's after a defined downtrend. Let me kind of put this in here. After a defined downtrend, you have a final kind of a hurrah to the downside, and that's this red candle here. And then from there, the following day, it actually opens below that particular price point and then closes above that price point. In other words, it engulfs the entire candle. So there's your engulfing bullish. And so we look for that, or a piercing line, a three-river morning star, in terms of different patterns. Now, what's important is that we look for these patterns at specific fib levels. In other words, if it is clearly in an area that doesn't have historical data to back up an area of either support or resistance. It just doesn't hold the same kind of a weight. So as we're trading down in this area that we're looking for a potential bottom in the market, if we get that key pivot point here, that's when we look to make that play. On the other side, if we break below this particular price point, well then, of course, all bets are off to the upside, and we might even consider a short, because if it does break through this price point at 1240, it most certainly has the ability to go either to 1200 or this top here at around, just call it 1185 in that area. So now I don't believe the market's going to go that low, but this is that critical point that we need to see. Does it hold or does it break through? So traders, what about silver? Well, we talked about the fact that with silver, it's a little bit different than what we're looking at with gold. First of all, we identified the fact that we had this pennant formation or a compression triangle forming, that being a series of higher lows in the market and a series of lower highs in the market. We certainly got our break as it approached the apex. It was a hard break and a hard break to the downside. Then we attempted to determine where, in fact, that market might go to. Now, in terms of the market move, I've only got one major fib retracement. It also covers the yearly high and low of silver, just like our major fib retracement in gold covered the major high and low of the year in gold. And when we do that, we get this 50% area that comes in that's quite interesting. So it's deeper than the 38% as we saw in gold. It actually moved down further from the move from the bottom to the top. A 1740, we'll call it, we'll round it off. And so first we needed to see the market in fact hold above these areas. But there's one more aspect to that that we really want to follow. And to do that, let me pull up a chart I've got just behind that. And that's this weekly chart. And on this weekly chart, we have identified our long-standing support that was breached. It's simply drawn from these lows here and then carried forward. And when we do that, that break below this triangle right here, that hard break, which took us to the 50% retracement, also broke below, and I believe this is most importantly, this critical support line. So I would need to see the market trade above this on a closing basis, even though it's above the 50%, but I'd need to see that move up before I got bullish on silver. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.